So hello and welcome back to another episode of the Iconic Insights podcast. Today, myself and Shauna are delighted to be joined by Kevin from Quintas Capital. So Kevin, thank you so much for taking the time out to join us.
Thanks for having me.
We have done, I think, one webinar before for clients, I suppose, that were interested in investing in the EIIS Fund last year.
Yeah, we did one last Christmas. Yeah.
Last Christmas. So hopefully this time around, we're giving people much more notice and there'll be plenty of people getting in touch, I'm sure.
There was so much interest the last time.
Yeah, it was good.
And hopefully, obviously, that kind of came to fruition on your side as well. But what we tend to do, Kevin, to start off the podcast, and we feel like it gives the listeners a bit of an opportunity to get to know, I suppose, you as a person before we go into, I suppose, the real detail stuff, is quick fire questions. Now, they do come with a disclaimer. They're not very quick fire, and you can blame Shauna for that.
I'm sorry. Yep.
But I'll kick them off if that's okay. What was your first job title, Kevin?
Like as a teenager or post college?
Anything, I suppose. Professional, I suppose, is probably the best way to.
Professional tax advisor.
Tax advisor.
Yeah,
okay.
in EY.
Very good. Very good.
Yeah.
So straight into corporate pretty early.
Yeah.
Yeah. Did an internship there in Dublin.
Excellent.
In tax in EY, and then you go back after college and spend 5 years there straight away.
Very good.
If you could live anywhere in the world, where would it be?
I would say Melbourne. I've lived there before and I'd love to live there again. It's brilliant.
Yeah. Tea or coffee?
Coffee.
Coffee, yeah.
Too much.
We're all the same. So,
Yeah.
Your favourite season of the year?
Summer. Yeah, it has to be summer. Summer's just ended as we're recording this, and it was a lovely summer. I really enjoyed it.
It was, to be fair.
Yeah.
It's probably the best we've had for a while.
Yeah.
Early bird or night owl?
Early bird. Always up early. I use train early in the mornings. I work early. I could easily be in bed for 9 o'clock, half 9.
Yeah, I'd
And
be
be
the
happy.
same.
Yeah, 100%.
Definitely am.
Yeah.
Your favourite board game or card game?
Oh.
I know, this is a new one.
Don't really have one. Probably go poker. I used to play poker quite a bit. Haven't done so recently.
Strong poker face?
Not really. I'm okay. Yeah, I'm okay. I've won a bit.
Is there anything in particular you can't live without?
My golden retriever.
I thought that might be the answer.
Yeah.
My wife and son will not be happy with that answer. But I think she knows it's true.
Man's best friend. Man's best friend.
The best advice you've ever been given?
From a business perspective, best advice I've ever been given is control your OPEX, because revenue always disappears or gets delayed. You can write all your projections on a spreadsheet, but people don't pay you, or deals you thought were going to close don't close. Always give yourself so much leeway with your operating expenses so you can live to fight another day.
Yeah. Brilliant advice. Brilliant advice. The rainy day fund has to be there.
Yeah.
If you could swap lives with someone for a day, who would it be?
Swap lives with someone. Go like a Premier League soccer player. I'd like to see what it's like to play with Arsenal.
You're an Arsenal man then. An Arsenal man.
They did well the weekend.
They did.
Yeah.
They did.
Yeah. Your favourite hobby outside of work?
Favorite hobby is I do a lot of traveling. Love traveling. Don't know if it counts as a hobby.
Yeah, definitely.
No, it definitely
And
does.
soccer as well. Yeah, I'm obsessed with soccer.
Are you playing soccer still?
No,
No.
way too old for that.
Yeah, same as yourself.
Way too dodgy
Same as
back.
yourself.
But yeah, I'd watch a lot of it. Yeah.
Yeah, brilliant. What was the last concert that you attended?
I was at Oasis a few weeks ago.
Oh, brilliant.
But yeah, normally I only do about one concert a year. Wouldn't be the biggest music fan, and I like the odd overnight music festival too.
Yeah, very good. Very good.
The top item on your bucket list?
It's left on my bucket list. I'd like to go to, I don't know, somewhere weird I haven't been. Antarctica?
Okay.
Yeah.
Yeah.
I've done a lot of travel.
Yeah, I'm like, what?
I've seen a lot of places.
Summer as the favourite season. We're heading to Antarctica. Fair play. Fair play. Have you ever won a contest or competition maybe?
I was a good swimmer growing up, so I used to be a competitive swimmer, so I'd won quite a bit.
Fair play. Fair play. And last but not least,
If you could time travel, would you go to the past or to the future?
I think it has to be the past. It'd be a bit weird to go to the future.
Yeah. You don't know what's going to happen.
Yeah.
Yeah, like I think everyone wants to experience something they've done in their life before.
Yeah.
I definitely don't want to get older anyway.
Yeah, exactly. We're trying to slow that process down.
Yeah, I definitely don't want to get older.
Fair play. Shauna, there was a couple of new ones there.
I know. I had to switch it up a bit.
Yeah, you're keeping it fresh. Keeping it fresh. So, Kevin, thank you very much. That's the end of our quickfire questions. What we're going to get into now, if you don't mind, is could you start by telling us a little bit about your own career journey? Obviously, you've touched on that in terms of the tax piece with EY, and what led you into the world of investment.
So I was always an investment nerd. Like ever since I was kid growing up, loved the stock market, everything. I did finance in UCC in college, where I went into college in 2007.
Okay.
Where everyone at the time was becoming investment bankers, going to London, going into the investment world. Then financial crash happened and everyone became accountants. So I came out of college in 2011. So everyone went to like EY and Big Four and that kind of stuff from our class. So I went into the world of tax. I did my accountancy exams, my tax exams, lived in Dublin for most of my 20s, and then decided to go. I worked in India for a while, setting up an outsource centre there for Irish tax with EY. And then I decided to go travelling for a couple of years, lived in Melbourne for a while, and came back to Cork. I'm from Cork, live in Cork now. I came back about 6 months before the world shut down for COVID.
Oh,
Okay.
So I tried to move to Cork. My wife tried to stay in Dublin. We thought it was going to be a short-term thing for about 6 months until we got a house sorted, and then the whole world shut down. So I ended up coming back, living in Dublin for a while with her remotely and stuff. I was a tax advisor at the time. Started doing a lot of work with high net worths. My kind of investment nerdy stuff was always happening with investments. The accountancy firm I worked in did a lot of investments too. And then I pretty much the whole world just stopped in COVID. You kind of do what you wanted and reset and stuff. So I just decided for once and for all I was just going to go professionally into the investment world, and convince the accountancy firm I worked for, Quintas, to allow me to start an investment firm and spin it out of their brand and start a new fund and a new firm. So thankfully they were very entrepreneurial people that backed me to do that, and that was about 3 years ago. So I've been running the investment firm since then.
Ever since.
Incredible. Incredible. Serious story behind it all in terms of the travel, obviously, and like a very comprehensive kind of, employment history as well before that.
Well, I haven't had many jobs really. Like I've only worked with EY and Quintas.
Okay.
So that, other than a couple of odd jobs in Melbourne and stuff, like 5-month contracting jobs as accountants or that kind of stuff. But yeah, I've only really had two professional jobs. What did I do? 5-6 years in EY, 5-6 years in Quintas now.
I think the people that are sitting behind the desk all day are probably thinking, it sounds a lot more exciting your side in terms of going off to India and opening an outsource centre, obviously travelling Melbourne and Australia as well.
Yeah. I like travel. I've done a lot of travel in my life. But yeah, that phase is over now. Until I probably retire.
In 2 years. I'm joking.
I've committed to doing this until I'm 50 anyway, which is another 13 years.
Okay, excellent.
So Quintas Capital, so it's obviously very quickly established itself as one of the leading wealth management and investment companies in Ireland. And you mentioned there that you built on the reputation of Quintas Group. So what services do Quintas Capital offer, and like what would the day-to-day look like in the company, and like your typical clients that you would work with?
So we only deal in private markets, like just private market investments, no public market stuff. We don't manage anyone's money. Like we wouldn't, we don't sell services for other people like in the way like a financial broker would or anything like that. We'll only do our own projects. So find the investors, find the projects, put them together and then manage them to exit. Okay. So like there wouldn't be a whole lot of companies in Ireland that do this. Like Elkstone would be relatively similar, but they're more venture. We wouldn't be venture. We're more sort of a private equity firm. And so like within Quintas, we have 3 different business lines. One is our EIIS Fund, which we're probably best known for, and we can touch on a bit more in a minute.
Definitely.
We have a private equity business that we're hopefully about to get our first deal over the line, and we have a real estate business as well. So we do a lot of sort of investments in Irish real estate.
Okay. That's really interesting.
Yeah.
I think you kind of asked about our client base there as well, did you?
Well, again, I suppose we do have a little bit of an understanding of that from the EIIS scheme, which we're going to go into more detail on. So I think we can probably
jump straight into
that.
Yeah, I think that's definitely the topic that a lot of the contractor community, particularly at the end of last year, had a lot of interest in. So if you were to put it in really, really simple terms, what is the EIIS scheme? I'm probably going to mess that up a few times today.
So like I never actually, when I'm saying this, I never put in the second I. So I just always say EIS. Now that actually is what the UK one is called, so it can confuse people, but I always say EIS and no one corrects me. Okay. So yeah, saying EIIS is very hard to say. That's actually probably a better way. So yeah, I'll just go with EIS. So what was the question? Sorry.
So like if you could put it in like really, really simple terms. Yeah,
simple terms. So
it'd be my understanding. It would help me basically.
Yeah, okay. You invest into Irish companies.
Yes.
That are less than 10 years old.
Okay.
And revenue will give you money back for doing it. Generally up to 50%, but we only deal with 50% investments. Okay. So it's clear, it's concise. Everyone knows, okay, if I invest 100K, I get 50 grand back.
Okay.
Whereas other ones have like blended rates and stuff where like it might only be 35% tax relief, it might be 20% tax relief, it might be a combo of 20, 35, 50. We just deal with 50.
Okay.
And if you like, our fund last year was like around 8 million invested, and it was just 3 projects, 50%, everyone got 50% tax relief.
Okay.
So I like, in my mind, like confused people don't buy. So if you're telling people my tax relief might be 43.5%, it might be 28.5%, they're going to be like, well, I can't plan for this. What are you saying? Like, so we just stick to 50%. It's not easy to do, but it's just the way we've gone.
Excellent.
Very good.
And then I suppose with the structure that you guys specialize in, which is the 50% bracket, like you mentioned, the natural goal of any investment typically is obviously, like you've already touched on, the exit piece. Is there a specific timeline that you try to aim for, or does that very much vary depending on the actual project and the investment itself? Yeah,
so each EIS investment has to be a minimum of 4 years.
Okay.
So you have to buy shares in a company, and like per revenue tax guidelines, it has to be at least 4 years.
Okay.
So we try to get out as close as we can to 4 years, but it's generally 4 to 4.5 years. In terms of exit mechanisms and stuff, there's loads of different ways, but in an ideal world, they've saved up cash and a mixture of bank finance to refinance you out. We don't like buy pure equity in a business that, you know, you all exit together. We kind of sit ahead of the other and the founder investors, and we look to be refinanced out by a bank or something like that.
Okay, so it's very interesting. And then obviously just to kind of add, because I know that this will probably be one of the questions that I suppose people jump on us with immediately in terms of, can I invest with the funds of my business? The answer to that is obviously no. It's personal funds that have been processed through payroll or through bonus.
But you can like pay yourself a bonus, create a tax liability, and then invest through that.
Yes.
Like a lot of our investor base are business owners, not PAYE. So like, they're doing tax structuring personally or whatever, and like, you know, they come to us at year end saying, oh, I'll declare myself a 100K bonus and then I'll invest into your fund and I'll get my 50% tax relief. So that's very common.
So that also must make Quintas obviously quite, I suppose, high up on the list of people in terms of you get your tax advice, and then obviously the capital side of the business can also support you then when it comes to the investment piece.
Oh yeah, but I don't give tax advice.
No, at all anymore?
No, I actually so I was a tax advisor in an accountancy firm. That accountancy firm was sold and we spun our business out.
Okay.
So part of our agreement is I'm strictly not allowed to give tax advice.
So no 2 for 1.
Yeah, look, I might do some barstool tax advice, but I don't give advice. I don't have insurance to give tax advice.
Understand.
And I haven't practiced tax in like 3 years, so my tax skills are getting worse and worse by the day.
That's fair. You sound busy enough to be fair as it is, Kevin. So,
and what makes the EIIS scheme different than other investment opportunities? Is it that 50%?
It's the tax relief. Like it really is. Like no one likes paying tax.
Yeah.
Ireland is a crazy high tax jurisdiction for personal tax. Like people are paying 51% now, I think. And it's very common. Like anyone who's above like 44k earnings is on the 51%. So it's just the only way really to get money back, unless you're talking about pension. And, you know, if you're in your 30s or 40s and, you know, it's not that exciting to be putting money away in your pension. It's locked there till you're 50 at best, more likely 60, 65. Yeah. So like EIS is there for 4 years. You get it out. You can potentially save more tax than going into your pension. So it's extremely attractive. And there's a lot of interest in it in the country now, especially since the rate went up to 50%.
Yeah, definitely. I was going to ask that. It must have catapulted in terms of the amount of incoming inquiries that you get about the scheme in comparison to prior to the...
Yeah, like... It was a lot easier when it used to just be 40% everything, and it was very clear, concise. Everyone could just deal with it. There was no real issues. When it went to this like mixed rate of 35, 50, this kind of stuff, it became very noisy for a while, and everyone was like, I'm just going to leave that settle down. I'm not going to. So like there was a year where like Ireland in general had way less EIS relief, like or tax investing. And it took about 9 months for it to kind of stabilize, and now it's just going up and up. Like there's not that many regulated funds in Ireland. It's a real niche space, but there's a lot of interest. There's 4 regulated funds. One of them didn't even raise a fund last year, so there's only 3, potentially another one this year. But like, I might be biased, but like we're by far the best at like sales and marketing and stuff and getting our name out there. You know, one of the funds is backed by Goodbody. Like they don't have to do a whole lot to get investors.
Yeah, absolutely.
They've plenty, but like we try to educate people. We try to be out there, you know, on LinkedIn and talking and stuff. And it, you know, other fund managers have even said to us that our efforts have helped their funds too, because there's a lot more investors in Ireland than there is good EIS investments. It's just a lot of people don't know about EIS investing.
Yeah.
Education is massive, obviously, on that, isn't it? And we really noticed that even in the contracting space, not to take it away, obviously, but I suppose prior to 2020, it was very limited in terms of what information was, I suppose, available on the likes of LinkedIn about contracting and the benefits of contracting. Whereas kind of 2020, there was a real shift in that. And I feel like obviously other, I suppose, companies as well as Icon Accounting obviously jumped on that bandwagon, and now there's so much more education and information about contracting that the demand for contracting has actually increased as a result of that. So I'm sure it'll be obviously quite similar. Yeah,
but I mean, for contracting, it's extremely attractive for employers too. You know, having full-time staff is there's a lot of hoops to jump through. So like you can totally see it from multinationals' point of view and stuff. Like employment laws in Ireland are very strong and becoming stronger and stronger
by the day.
It is like, I did an employee handbook recently, and it was challenging, really challenging with HR consultants and all this. Like the amount of regulation the EU's released in that regard in the last like 3-4 years is crazy. And like, you know, as a small business, it's hard enough to do. So like, I can totally see why contracting is exploding when it is complicated having employees these days.
Absolutely. I suppose one of the things that you touched on is obviously the vast majority of your client base would be business owners. Is it traditionally kind of SME, or is it less SME, more kind of, I suppose, medium, large enterprises that you'd be engaging with most commonly?
Yeah, like within our business in general, so we'd have kind of different levels and tiers of like investors, who's our niche spot, that kind of thing. So like our EIS fund starts at 25k investment. That's pretty much accessible to a lot of the Irish nation, especially anyone who's over 40. There is a lot of people now in Ireland, you know, tech industry contractors who earn more than 100,000 in a year. So like most of them, it's accessible to do a 25k EIS investment and get half your money back within kind of 6 to 9 months. Like at the upper end of our scale then is like people who might do like €1 million investments in non-EIS projects and stuff. It's like they tend to be business owners who either have a holding company structure and are scraping a lot of profits in there, or else people who've sold businesses and are looking for something to do with their money because they have it stuck in a holding company.
Understand.
And like we'd work with some of the very high-end wealth managers as well, like Quilter and Julius Baer and stuff. We'd have a lot of common clients with them, and good relations. You know, we stick purely to private markets, and those kind of guys stick purely to public markets.
Okay. And 25 is obviously, like you say, the entry level. Is there a maximum in terms of the EIIS fund?
It's gone up recently to 1 million.
Okay.
So I don't see that being an issue at all. About two years ago, it was 250k as the max. So we used to have a bit of resistance with that. People looking to do more. Last year went up to 500,000. I think we had one investor who did 500,000 who wanted to do more. I don't think we're going to have any investors who are looking to do more than €1 million. Like, the thing with EIS is you have to create the tax liability to do that. So like, if you want to do €1 million investment, you'd have to have about 2 million of gross earnings as like a PAYE worker.
Yeah, to make it actually.
And even at that, you're like, you'd want to be mad to be throwing €1 million into EIS in 1 year. Like, if someone came to you with that, you'd probably be saying like, do you want to do 250k 4 years in a row or 300k 3 years in a row, something like that?
That's really interesting as well, because obviously, let's say, for example, and I know I take your point completely in terms of like, you'd need to be on kind of a gross payment of €2 million to actually, make that worthwhile. But is that from a diversification piece that you kind of say, well, let's do 250 over 4 years, or? Yeah,
pretty much. Yeah. I mean, look, we have investors who've made a lot of money from liking something and going for it. Like, that's mainly all business owners. They put all their eggs in one basket. So we do have a lot of investors who say, if I look like something, I research something, I want to put all my eggs in this basket. So like, we do have people like that too. But like, from a purely kind of risk reward perspective, I would always kind of caution people. Even at the smaller level, we'd often have someone who's saying, I've just sold an apartment for 200k, I might put it into EIS, and be like, would you consider doing 100 grand this year and 100 next year, or 80 over 3 years or something like that? You don't want to, like, especially if people can't afford it, you don't want to be throwing it all in 1 year.
100%. No, that's fair. That's absolutely fair. I suppose moving on to kind of some of the projects then that you directly target and get involved in. So social infrastructure projects and trading businesses, does that kind of summarize the majority of your?
Yeah, so like, for an EIS investment, it has to be a trading business.
Okay.
So like, if you take a building, for example, if someone went and bought like a commercial building and rented it out as office space, that doesn't count, because it wouldn't be a trading business, it'd just be rental income. Whereas if they bought a building and converted it into like a WeWork,
now it's a trading business,
because it's a trading business, it's service. So we look for businesses that they need a physical premises that they can buy and that they operate out of. So like, the 3 we did this year were a creche business. So they're buying physical creches off like new housing estates. They bought a couple off Cairn. So we had funded that for 4.5 million. We did an apart hotel on Ormond Quay. So bought a kind of rundown derelict building. There was actually the poster boy of an Irish Times article recently for the state of dereliction in Dublin. So we're very happy that's going to be an apart hotel. And the third one is paddle court business. So promoters we know bought a very nice kind of warehouse in Cork City, in a nice area. And they're putting in paddle courts and saunas and plunge pools, having kind of an upmarket like fitness centre.
Yeah, the demand for that is obviously increasing week on week as well, to be fair.
Yeah, so we're looking at more stuff like that now this year. Renewable projects, hotels, creches, nursing homes. There's loads of things really that fit within like social infrastructure.
All sound like bulletproof at the moment, to be honest, in terms of creches.
I wouldn't like to use the term bulletproof because
you can, but I probably can a little bit freely. But no, that's fair. That's fair. In terms of, and again, I'm gonna hand back to you, Sean, in a moment.
I think you want to ask the next question, so I'll let you work your way.
I suppose this is something that I'm really interested in. And again, don't get me wrong, you said that you were, I suppose, always kind of an investment nerd when you were younger, etc. I probably wanted to be, but didn't actually commit the time to actually fully understanding it, to be completely honest, Kevin. But one thing that I've always had a real interest in is, what does, I suppose, someone like you and your team look for when you're actually going out to the market looking for, I suppose, suitable opportunities to invest in?
Yeah, so like...
without giving away your secrets.
Look, there is no secrets in the investment world. Everyone's looking for the same thing. How can I maximize return for the lowest risk?
Yeah.
Like, there is no need to go out and shoot for the stars and lose someone's money and going for broke. Like, that's just a horrible strategy, and a strategy you will not sleep well with trying to do, or I won't sleep well with anyway. So like, I've had several investors saying to me, and it always sticks in my head, they might be doing a big investment and they're just saying, don't lose my money. Like,
Yeah.
they just don't want you to lose their money, which is completely fair and rational. So like, we try to do like the safest investments with the best upside we can get. So like, we don't, you know, we have done a few in the past. I won't be doing them going forward. Is like, we won't invest in stuff that is loss making. Like, unless there's a complete turnaround story and stuff there. But like, we love cash flow generating businesses, businesses that generate cash, because you have your destiny in your own hands once you're profitable.
Yeah.
Once you're a loss making business, you're dealing with market, you know, a lot of the VCs complaining at the moment they can't raise money, they can't do follow-on rounds, that kind of stuff. It's because their business is destined by market swings. Whereas like, if you're just investing in profitable trading businesses, even in the bad times when you're doing okay, you won't need to go to the market to raise money to survive. So that is our number one. Business got to be able to make cash.
100%.
We don't really care about like unlimited upside or becoming the next Stripe. That's for the venture guys, so we kind of stay away from that. A lot of our businesses do have a real estate angle, especially within the EIS world. We do some housing estate developments in our other business. So yeah, we do like physical buildings and property. Irish people love property, so it's always easier to get investors on board when there's a property angle than a loss-making tech business.
Yeah, fair. Completely fair. I think obviously it's massively important as well. I know obviously we're talking about the benefits to an investor, etc. here, but in terms of actually the development that happens in areas like you just mentioned, like it's funding housing estates, which are obviously desperately needed at the moment. Again, you're changing derelict buildings into, I suppose, well, I'm not saying that you have a hard hat on now, but at the same time,
I have my hard hat.
but the fund,
like tomorrow.
the fund that you're obviously, you know, growing and essentially collecting contributions for, then goes to actually change a derelict building into a building that's
yeah, like it's away from our EIIS Fund now, but we're doing investment at the moment. It's a housing estate in Galway. Hasn't closed yet, so I can't really announce like the details, whatever. But when we went to our investor base with that, like, we were many times oversubscribed. Like, people absolutely loved it, and like, you know, I thought it was a great investment, and there's great returns in it and stuff, which I knew we were going to fill the investment. But what I didn't realize is like, a lot of our investors actually love the social side of it. Like, a lot of our investors are males who are in their 40s to 60s, and they have kids who are in their 30s, 20s who are emigrating because they don't have houses. And like, it's a major social issue. 100%. So like, not only were like our investors been like, great, this makes sense, they were like, yeah, this is actually something I'd love to be doing with my money. It's supporting what is so badly needed in this country.
100%.
I think that's actually a really good point as well. Is kind of, now, I know it could be kind of an obvious question, but it's like, what impact is that funding having for, let's say, those 3 companies that you picked last year? Like, what difference is it making for the investors, so they kind of know as well? For the investors? Yeah.
Well, the investors got their 50% tax relief.
But the companies that the money's actually being funded into.
Oh, the actual companies. Yeah. So like, if you take the 3 companies, like the Crash Group, they're all new businesses. Yeah. So like, this was literally their kind of seed capital. Yeah. But it was, you know, they had put in, each of the founders had put in significant capital themselves too. You know, they had, in all the case really, like, put like most of their life savings, and they've all had like successful exits and that kind of stuff. So there was wealth there, but like, it's very difficult to get the level of financing that we gave them from anywhere really. Yeah. Banks don't really look at like early stage companies to give them money, even with a real estate angle. They might give you a percentage of the value of the property, but not really. You know, the venture world is unlimited upside, so they're for startups, but you know, they're not investing in crash businesses. They're not investing in paddle courts. That's not venture. So like, there isn't a whole lot of places that these companies look for, maybe into like the private credit markets and stuff. So like, like there's a very real chance that, you know, 2 if not 3 of these businesses wouldn't have like happened if we didn't fund them.
It's brilliant.
Yeah, that is. Yeah, it's a real good news story. Yeah. And again, very rarely, and unless I'm missing something, it's kind of a good news story across the board. Do you know what I mean? Because the investors obviously benefit. Again, immediately take the risk aside from any investment that you're going into, but you get your tax relief. I suppose the social piece is that box is ticked pretty much immediately. Yeah. So yeah, it's win-win.
Yeah, like the creche business there in particular, like it's a real good news story. Like, they'll likely have 10 creches open in the next 18 months. They've just opened 2, and they kind of have a pipeline of opening 1 a quarter for the next 2 years. So like that'll be one of the biggest creche groups in the country in 2 years' time.
And badly needed, to be fair.
Yeah.
Badly needed. Like, it's
speaking as a guy who just had his first child, it's a lot of stress.
But genuinely, like, it's almost like whilst actually even prior to birth, it's like you need to be planning where this child is going to creche. You know?
Like we put up some LinkedIn posts about like, we're opening creches in, like, they're opening them in Wexford, Limerick, Cork, kind of 3 in each place. And like, I grew up in Cork, and I was getting messages from people who went to school with who hadn't talked in 20 years, been like, can I get a place in your creche? And so I was like, Jesus, like,
it is.
You don't realize how bad it is until you actually have kids.
Oh, I know. But no, it is. It's badly needed. Same as the housing piece, obviously, badly needed. So no, it's really interesting. I suppose what can investors maybe expect as part of it? Is it very much, I suppose, understood at the point of entry, Kevin, that okay, well, you're giving me 25,000, you're gonna get your tax relief, and this is how you go and do that. I'll talk to you in 4 years? Or is it a case that kind of there's like annual maybe catch-ups, or
well, like we do reporting every quarter.
Okay.
Like proper reporting now through an investor portal within 45 days of each quarter end.
Okay.
So say at the end of like March's quarter end, we would then report to investors by middle of April.
Okay.
We catch up with our companies every month. They give us full reporting every month. We sit on their boards. So yeah, there's quite a lot of work goes in with the companies. Like we're very hands-on with the companies. There's a lot of good governance and stuff there.
Yeah. So your due diligence obviously is, as you'd expect it to be, quite high, but then ongoing, it's also, you're very much involved.
Yeah, like, I mean, look, it's very easy to do an investment.
Yeah.
Everyone always wants your money. It's getting out of an investment is kind of where you earn your money, and where it is very challenging. So like, you know, you need to be close to the founders you're working with. You need to have a good relationship. They need to respect you. You need to respect them. And yeah, you need to be on top of them, to be honest. Yeah. Like we are more similar to a kind of banking relationship with the founders than like a private equity or venture capital. So like we try to ensure good governance, that they're not taking too much cash out of the company. They're not asset stripping. They're basically not doing anything stupid, and that would all be documented in a shareholder agreement,
which is brilliant. Obviously, and again, I think it gives obviously any investors that kind of element of security in terms of it can be trusted, but also it I suppose it gives you visibility of exactly what you need on a month-to-month basis, like you say. Yeah,
and I have no qualms with saying, like, there's a lot of jokers in the EIIS world.
Yeah.
It has a dodgy reputation at times, and it has over the last 20 years. There's so many people who've raised money in EIS with never intending and ever giving it back to investors. But like, the main common thing is like, there's definitely not a regulated fund involved in it, and there's definitely not like even an investment manager or something look after investors. So like, you know, I see people put an ad in the paper saying, send me money and I'll give you a tax relief. You might get your tax relief, but like, it's highly unlikely you'll ever see your capital again.
Yeah. Again, which is really important to note, because obviously we all have access to Google to type in, you know, EIIS, and again, it ultimately comes down to the reputation that you and the team have built at Quintas.
Yeah, like we've two EIS websites. One's being redone at the moment, EIS.e, and the other one is quintascapital.e with the EIS piece. And like, I think we're maybe 1 in 5 on the SEO rankings on Google with the two websites. And like, there are people who target our website with ads to rank next to it on Google with very similar names, and I know they are not people you want to give your money to.
We know all about it. We know all about it, Kevin. But again, homework is obviously the lesson there to anyone that is listening. Do your homework. You know, in terms of reputation, is I suppose probably first and foremost in this game.
And like, look, the Central Bank of Ireland does their job. They're ball breakers for a reason. It's an industry that needs to be regulated. So yeah, like we run a regulated company, heavily regulated company. It costs a lot of money to be regulated. So like I would always go the regulated route if I was an investor.
Yeah, no, that's fair. Good advice.
I think that moves on to the next point. Essentially, is that Icon Accounting have partnered with Quintas Quintas Capital to make the EIS scheme available to contractors, and particularly I think that education part of it is key in that partnership. So why would you see contractors as a good fit as an investor in this scheme? Is it like that starting point, let's say the 25k, and build it from that? So
I mean, I'm assuming like the typical contractor is, you know, probably someone who's earning a 100k to 250k sort of.
Yeah, fair.
That's reasonable enough to assume.
I'd say probably the kind of opening bracket might be slightly lower, but if you've done a year's contracting, realistically, that's where you should be kind of aiming towards, is that 100,000 mark. So
so like anyone who's taking home like say 200k in a year is paying close to 100 grand in tax. You know, if their gross is 200k, they're probably not getting much change out of 90k in their tax still. So like in my mind, like what are your options? Like you can pour money into your pension if you have your own limited company within limits, or if you actually want to get money out and have it, you know, you can invest in EIIS. So like in my mind, it's ideal for contractors. It's ideal for anyone in Ireland that earns more than 100 or 125k.
And I think obviously you touched on it there with regards to the pensions. Obviously there was caps introduced. Can you see that having an impact in terms of the popularity of EIS?
It should do, yeah, it should. I mean, there was a bit of a manic time there for a couple of years where I was seeing people putting like 2 million into their kids' pensions and stuff who were fake employees in their companies. I know there's revenue audits going on. But yeah, that had the opposite effect in EIS because like a lot of investors just didn't have free cash at the time because they were like, oh, well, the limits are gone at the moment and companies are going to pile everything into it. So with the restrictions coming back in, yeah, there certainly is. And like, I'm not anti-pension. Like everyone should max out their pension of high earners. Like you should get close to the million, 2 million in there and have it invested in a sensible way. I'm not advocating that everyone should pour all their money into EIIS. It is risky, but it's certainly a valid alternative.
Yeah, 100%. And again, in fairness, the more I think that you learn about the EIS, and particularly obviously, like you say, the framework that you have in terms of qualifying suitable businesses, what it is exactly that you're essentially looking for, that'll be music to any potential investors' ears as well.
Yeah, and like you mentioned there, like our framework, like we do a very strict framework on what we will allow, or what we allow our investment team to look at or invest in. So like there's a few things. So like we want there to be a real estate angle. So, you know, either buying a real estate, but if there's a long-term lease, we'd potentially look at it too. Business has to be cash flow generating, or it needs to be cash flow generating within sort of 12 months.
Yeah.
Needs to be an experienced founder that we know they have a good track record, because it is a startup investment. You don't want to just give it to some, 20-year-old who's their first time learning how to run a company.
Yeah.
And kind of going side by side, the founder needs to have cash to invest themselves. Like we're not coming along giving anyone 100% funding or anything. So they need to have sufficient wealth and be, skin in the game themselves.
100%. Was that, I suppose, something that you picked up maybe during a very difficult economic kind of, I suppose, environment while you were in college? Just in terms of that framework, is that something that you kind of instilled?
Well, that like those kind of 4 criteria are something we just had in the business, like in our EIS fund for about 18 to 24 months. I mean, when I was in college and there was tough times, I'd say I didn't even know what was going on. I was enjoying myself in college.
But it must have been interesting kind of to watch, I suppose, again, a very rare event in history. I know it has obviously happened before with crashes and stuff, but to be learning finance at that time when that was all going on. Yeah,
there was a lot of it in college about like, lecturers trying to get through like how big a deal this was and blah, blah, blah. But like at the end of the day, like, you're 19, 20 years in college and people are telling you the world's falling down and all you really care about is like the pub's still open and like everyone's still having a bit of fun. But like, you're looking at where's my job, where's my life after college is really what you're thinking about in college. So it definitely had a negative effect on everyone. But I think in the long run, it has a major positive effect. Like I actually don't really like seeing people now who come out of college and go straight into like private equity investment firms or something, and suddenly they're like a VC or a private equity person when they're like 23 years old and they think they know everything. I way prefer people to go some other route, have another career, and get into the investment world in their 30s.
Yeah, with real life experience kind of behind them. Then.
Yeah, you need to have some scars. You need to see through people's bullshit. People will tell you anything and just get money out of you, or, you know, pawn you off. You need to have nearly been on the other side of it within a company where they're dealing with investors and the crap they'll tell you and that kind of stuff. So yeah, I think it's a bad career move to go straight into investing. You should definitely go and do something else and find your way in after.
I think that's solid advice as well, to be fair, Kevin. That's very solid advice. Unrelated, well, I suppose slightly related, but it gave me kind of a shiver up my spine there when you were talking about being in college, and, you know, it was all about whether the pubs and stuff were open. I had an absolute howler in college. One of our housemates was studying economics, and it was probably 2011 at the time. And the lecturer told all of the class,
heard this story as
instead of what they were going to go out and spend in Harveys and Waterford or in Masons or wherever they were going that evening, to invest it in Bitcoin. Bitcoin at the time, I think, was 60 cents.
Smart lecturer, yeah. Not so smart of a house, because I don't think any of us actually invested in Bitcoin that evening. Where was the lecture?
In Waterford. Yeah.
Fair play to him.
Yeah. So I hope he's on a yacht somewhere.
I don't think any of our lecturers in UCC had any knowledge of what Bitcoin is. I'd say half of them still don't.
He was, in fairness, he was really, like, I wasn't in the class, like I say, where it was passed on, but that's no excuse because it was passed on secondhand. But I did have him for a couple of other subjects throughout college, and he was always quite on it, I suppose, and trendy. But yeah, flowers to him. I hope he's on a yacht somewhere, like I say, because I'm certainly not, Kevin.
Yeah, there are some fantastic lecturers in Irish universities. We're starting to take interns now, and we take them from our UCC finance course. Like, it's top course in Cork. Like, everyone who goes through it, it's fantastic. Like, we had an intern from there, was it last summer, and like he had just won the BT Young Scientist.
Okay.
And, like, you know, super smart kid. But yeah, like, same with our office in Dublin here now. Like, I think the lads are starting to take people from Bez and Trinity and stuff. So there are some super smart finance orientated college courses in Ireland.
It's definitely, I think, an area where Ireland does kind of sit very much amongst the elite, isn't it, in terms of from an international standard even?
The college courses do, but I wouldn't say the investment firms reflect that. I think like Ireland's quite I think Ireland's quite an underdeveloped financial ecosystem, especially in like private markets and stuff. There isn't a whole lot of it going on. Like, we have one shareholder who kind of grew up in Cork, but he managed an investment firm in Dubai. There were like 350 staff and 15 billion of assets under management.
Wow.
And he was the CEO there. He's only in his early 40s now. And like, the level of financial sophistication in the Middle East in comparison to Ireland is just like chalk and cheese. So like, I think more people need to go abroad, learn the financial ecosystems elsewhere, and bring it back to Ireland.
To develop it here.
Okay.
Yeah.
That is actually one of the questions as well. I was kind of like looking at the broader investment market and kind of what changes or what trends do you see coming into Ireland over, let's say, the next 5 years when it comes to investments? I know that's a very, very broad question. So I guess probably what you would like to see being introduced.
No, it's actually an easy question. What I would like to see and what I think is going to happen are probably the same thing. There is, so like, if you think about the different asset classes, like in investing, for years, everyone wanted to work in the public markets. Okay. I grew up, I wanted to be a stock picker and work in the stock market and all this. And like, now that is not a sought after job anymore. Everyone goes into index investing. You give your money to an index fund, and even all the financial advisors and everything just say, why bother pick stocks? You just go to index funds. And index funds are majorly growing. There's not that much. If you're a young college kid now who's really interested in top tier, you would be mad to go anywhere near the public markets. Like, it's a dying breed.
Okay.
Whereas all of the smart kids and smart money is going into private markets. It's kind of the public markets of 30, 40 years ago. Public markets is very underdeveloped in Ireland, like extremely underdeveloped. And I think it's going to explode over the next kind of 5-10 years. So there's loads of really good funds in Ireland and like residential development and private equity and stuff, but a lot of them they all deal with like one asset class, and they're just specialists in one asset class. There isn't really like many Irish firms who take on a few different asset classes at once. So that's kind of what we're trying to do.
Yeah.
And I imagine that's going to be like majorly exploding over the next 5 to 10 years.
Exciting times.
What needs to happen for that to happen, Kevin? From an outside kind of, I suppose, environment and ecosystem perspective?
Not much, to be honest. It's naturally happening. So like, if you think like, there's a lot more wealth in Ireland than there was 10 years ago.
Yeah.
So like the amount of people who are selling their businesses now for 10 million plus up to €1 billion is like, you know, I don't know if you read the Renatus newsletter. There's literally people selling their business for 10 plus million every week. Like loads of people. That would have never happened 10, 15 years ago. So all of these people now are looking what to do with their money. Most of them are business owners. They want to invest in businesses and deal with real people and stuff. And like to just go to a wealth manager and say, here's my 100 million, make me 10% per annum. It's very boring and dull for people. Like people don't really have interest in that. If you've been an entrepreneur all your life, you want hands-on stuff. So like
hardship. You're looking for hardship.
Yeah, but you're looking to be involved in something, make a few decisions, set up your own family office, that kind of stuff. So like that all leads to private markets. Like even the bigger wealth managers now are starting to acknowledge that like, and the family offices in Ireland, which would have never looked at private markets, are starting to acknowledge that like at least 20% of all their family's wealth should be in private markets, and not just I own BlackRock or Blackstone, is it? Blackstone or KKR on the public exchange, actually in proper projects. So I think that's going to be a huge growth area, and it's going to be driven by the investors who want that exposure as opposed to the advisors who are probably confused by it all.
Okay.
Again, I think you've probably already given this, Kevin, but just to make sure, I suppose, and we can kind of summarize it to any of our audience, if you could give one piece of advice to our contractors or individuals for that matter that are thinking about using the EIIS, what would that be? Especially those for the first time, of course. Yeah, so like
we'll be hosting a load of webinars between now and Christmas. Like the EIS funds as opposed to like directly investing. So you can directly invest in a company and claim EIS, like get your 50% back, or you can go to a fund and they'll diversify it into several different companies. So like what we run is a fund model. Last year we invested in 3 companies. So you split your funds between the 3, bit of diversification. So like I'd advise going the fund model. 100%. I'd advise going on webinars and actually trying to learn about it. I'd also ask the funds, like, what's their track record of actually investing the capital on time.
Yeah.
It's a big thing because you don't get your tax relief till the funds are invested. We've just completed our fund for last year investing. So the goal is to have it invested in time for tax filing season in October.
Yeah.
So we've thankfully achieved that. But yeah, like you don't, that's kind of learn about it, go on webinars, and ask people about like what's their track record for actually investing, getting capital back and that kind of stuff.
Okay.
And again, that's something that I, to be honest, never even would have brought into the equation in terms of, well, when does that tax relief actually kick in? Obviously, it's after the investment has been made.
Yeah, so if you invest directly in a company, you can get it straight away.
Yeah.
So like last year I invested directly in our creche business, and like you can get the tax relief revenue back to you in a week, which it's crazy. But like with a fund, it will take sort of 6 to 9 months for them to invest the capital, give you a tax cert. Then like if we were working with you or whatever, we'd give the tax cert to you, you just claim it back through tax returns for people.
Yeah.
Okay.
But revenue are really good. They'll have it back to you in 3-4 days once you submit it.
Yeah, in fairness, they have improved massively when it comes to that kind of thing, to be fair.
Yeah.
Again, really interesting point that you made, obviously, and I completely agree in terms of obviously the fund is definitely the way to go if you're dipping your toe for the first time, just for that diversification, if nothing else. You also get, I suppose, a little bit more exposure to people that have the actual, I suppose, skill set and the knowledge in the industry, such as yourself. But it must be difficult, and again, it's obviously part of your due diligence process at the point of when you're trying to actually identify who you're going to invest in, what kind of potential red tape you're going to come across. Because I can only imagine when you're talking about real estate planning, like all of those things kind of have to be boxed off before you'll actually kind of pick someone, or I'm sure things have come up out of the woodwork and...
Yeah, like, planning is a big one.
Yeah.
Like you don't want to be investing with planning risk, not in Ireland. But like, with our EIS fund, we won't take planning risk. We want projects that are kind of ready to go. And we fund people then to actually do a fit out or a construction project or something like that.
So the Metro's not going to be on your list for next year, no?
No, I don't think we'll qualify now. Yeah, we would. The limit's about 5.5 million a year. I'd say we'll have a couple of thousand million times over.
Yeah, no, that's fair.
What's the Metro cost? Looking at the moment, I see 29 billion was the last one or something.
Ridiculous, isn't it? Something ridiculous.
Yeah.
Surely be easier to just start again at this stage, build a man-made island.
It is. It's much needed. Like, it just needs to get done.
Yeah.
So, Kevin, final question. Well, from myself, anyway.
Yeah, no, it is. It is. Apart from obviously our contractor dilemma, which we'll finish up on.
Of course. So, where should listeners go if they want to find out more information about Quintas Capital, the webinars, and about the EIIS scheme as well?
So we have two websites. We have EIIS.ie, which is the best SEO ranked website, even though it's a horrible website that's being redone at the moment. And quintascapital.ie. We're very active on LinkedIn too.
Brilliant.
Kim, our IR manager, is very active on LinkedIn and keeps us front of mind there.
Excellent.
Very good.
Excellent.
Very good.
Kevin, we're going to finish up by giving you, I suppose, something that is, again, something that's, I suppose, a staple as part of the podcast. We always start with quick fire questions that aren't so quick, and we always end then with a dilemma that has come in from a contractor. So this is from an IT contractor that's working on short-term projects. Since EIIS often supports early stage companies, I'm curious, is this a smart way for contractors like me to invest back into the tech sector, or should I avoid concentrating too much in the same area as I earn? That's really interesting from, I suppose, a contracting versus employment perspective as well, because I can imagine if this person is in kind of an early stage, exciting startup, if they were an employee, they'd probably have stock options. They more than likely won't have, obviously, those stock options as a contractor. So they're probably looking for maybe an alternative to that.
Yeah, like what I would tell, like if he wants to invest in tech and that's tech is what he knows, I would tell him to go in and join HBAN. HBAN is the angel network in Ireland. Okay. There's one based in Dogpatch, if it's Dublin. There's one in Cork as well, in Republic of Ireland. And it's like a collection of people who invest into startups together. So like I think you can invest them from about $5,000 per investment. So you can do a few in a year if he's thinking at the kind of 25k limit. But yeah, if he really likes tech and he wants to go for it, like you don't want a cap return if you're investing into high growth tech companies, really. You want to go like the full on, just be an angel and help the business and that kind of stuff. Yeah,
at the start, as early as you can, essentially.
Yeah. I give a shout out to the Shuttle lads as well. I don't know if you've come across them.
No, not yet.
Yeah, they're building a kind of angel network to invest alongside VCs. So if you want tech, like they invest in a lot of tech. I think it's a subscription model, but you can invest in each company then from as little as like €250.
Okay. That's really interesting. Yeah. Really interesting. What did you say? Shuttle.
Yeah, they'd happily come on the podcast, I'd say, two lads.
Yeah, we'll be on to them anyway. We'll be on to them. Kevin, thank you so much. We appreciate, obviously, this is really coming into your busy season. Not that the rest of the year isn't busy. It sounds like you're always busy, to be fair. If not with the golden retriever, obviously doing your due diligence and everything else, but really do appreciate you taking the time out. Again, obviously we'll make sure to include the links to the website, obviously, as part of, I suppose, the comments. And that kind of wraps us up.
Thank you everyone for listening, watching.
Brilliant, thanks so much.